again with the debt ceiling crisis. So let's head over to Jose Grignon. Jose, it's really getting down to the wire now, isn't it?
Yes, it is. You've got 1 week and 1 day until next Tuesday, which is supposed to be the last day. And global markets are down this morning amid news that Congress did not reach a deal on the debt ceiling over the weekend. But two possible plans could be in the works in Washington. And my colleague, Fox's Kelly Wright, following this story in Washington as well. Now, Kelly, lawmakers really don't have much time left to work with.
They don't have any time at all, really. They have to get right down to the brass tacks of what they're going to do. We understand that the House will not meet until 2 p.m. today. That would be House Speaker Boehner along with his caucus to try and iron out some plan. But look, they're still struggling to find a compromise with Democrats, and Democrats doing likewise. And as they do that, it's clearly evident that investors around the world are getting nervous. With 8 days to go before the United States defaults on its loans and no obvious plan in sight from Washington, global markets fell Monday.
We're running out of runway. We're almost at the edge. I never thought they would take it this close to the edge.
Republicans are clashing with President Obama and congressional Democrats over how to solve the nation's borrowing problem. Democrats want a plan that raises revenue and lasts until 2013. Republicans are pushing for spending cuts and a short-term debt limit extension.
There was never any plan from the White House. The whole plan came from us. We laid out the framework, and at some point, they've got to lay their cards on the table.
But with the August 2nd drop-dead date looming, leaders from both sides spent the weekend formulating emergency plans that address the crisis in 2 steps. First, by taking the impending default off the table. Then, putting in place reforms to keep the country from ever getting to this place again.
We need to do both those 2 things so that Congress can get back to the business of trying to do things to make the economy stronger, get more Americans back to work.
So let's elaborate on those 2 things real quickly. House Speaker Boehner is actually warning his caucus that they will have to make some concessions. The plan that he's proposing resembles the cut, cap, and balance plan, although perhaps a diluted version of that. Now, here's the blowback he's getting. He's getting some blowback from his own party, the hardliner conservatives on that side of the aisle are saying, no way, no how, we're not going to dilute our cut, cap, and balance plan. On the other side of the aisle, Senate Majority Leader Harry Reid is proposing something that would give Republicans a concession. He's proposing a $2.7 trillion deficit reduction plan in order to raise the debt ceiling with no tax hikes and no revenue, something Republicans might like. However, the bottom of the line is, will they merge these 2 plans? Will they find some compromise on it? And that remains to be seen. We'll have to wait and see, and time is of the essence. Jose?
Yes, time is of the essence. You know, but I wanted to ask you this, since you've been a Washington watcher for a number of years, can a deal be worked out that would raise revenue, but also allow for spending cuts? Or are we just spinning our wheels?
It's a very good question. I've been watching Washington for a long time, especially politics. And anytime you're putting together a plan that requires some compromise, it can get dicey. But this is downright messy. You keep looking at it from the sidelines and you're wondering what is going on. They know that something's at stake, our future in terms of how we deal with our own debt. Obviously, we'll continue to pay that debt, but we don't want to default. We don't want to be downgraded by anyone. So the bottom line is you keep wondering and scratching your head. It's one of those things that make you go, And
there are a lot of people, not just in this country, but around the world, who are saying as well. Thanks a lot. Kelly Wright in Washington, D.C. Now, the big question is, will lawmakers be able to reach a deal before that August 2nd deadline? And what happens if they can't? Mike Iskovitz is talking to a couple of experts out in the newsroom. Let's check in with him right now. Mike.
Well, Jose, you know, we want to act as sort of a safety net for the folks at home. We've gone through this 2008 financial crisis that has everybody, me, still quaking in our boots. We're looking out for your money, so we've assembled a panel of experts to give you some advice on walking your way through this big crisis. We have John Bott. You can hear him on Biz Radio 1110. He's a bond expert. He's an equities broker. We're also joined by Nina Wilson-Jones, who's a business coach. And finally, Lance Roberts, you recognize him. He's the host of Street Talk on KSEV 700. He's also an investment guru. So let's begin with you, John. If you could, because this I've been trying to read up on this to totally understand what's going on and been picking your brain. Could you explain to the folks at home, maybe in a minute or less, in layman's terms, what exactly is going on? If the President and Congress can't come to an agreement, what happens?
Well, several years ago, Congress wanted more control over the deficit spending, so they passed a debt ceiling. And the debt ceiling has to be raised periodically in order for the government to continue working. Right now, the limit on debt ceiling is $14.2 trillion. And we're already past that, but they're using other methods to try to compensate, to try to get them to this August 2nd deadline that we're supposedly facing. And there are several things that they can do.
So what happens if they storm out and say, we cannot come to an agreement? What would the stock market immediately crash? Would people lose money in their 401ks? I mean, physically, what would happen?
Well, I believe that's kind of what happened on Friday afternoon, but as you saw, the stock market this morning was only down, about 100 points or a little less than 100 points.
So people aren't panicking at this point?
Well, not at all. And you look at the bond market, which ought to be just absolutely beside itself, and you got the 10-year bond at 3%, and you got the 4-year bond at less than 1%. So there's obviously no reaction in bonds or stocks to the negative as to what's going to go on if we have an actual default.
Nina, you talk to a lot of folks who have businesses, and is there a lot of, I know for me personally, and probably a lot of you out there too, following the financial debacle of 2008 and all the things that have happened politically since then, I think a lot of people have kind of lost faith in the system and have thought, what am I putting my money into here, Is this just a bunch of, is it all a racket? Do you hear that from people, or do they still trust that if they save their money, prudently, they'll be fine?
I think people want to believe that the system will work for them and to their advantage, but we teach individuals and small businesses that a lender or an investor in your entity is only going to be able to judge your future by what your historical performance has been. So here we have our nation about to default, possibly, therefore setting on a new track of, possible default, and the full faith and credit of not just our country, but the global economy, which is all integrated, is now being thrown into question, and our historical predictors will be forever altered. We can't get around it.
So all bets are off if they can't come to an agreement over the next 24 hours.
It could potentially set that up. Now, when I was a lender in a major bank, we looked at certain blips and looked at the circumstances around it, but it certainly would have been easier if you kept a very credible, strong track record of performance and not have an incident where there was a blip in your performance that you've got to explain away, and then have the rest of the globe looking at you and saying, hey, you guys slipped up this one time. Is that potentially going to be a problem in the future, and therefore we're going to charge you more in terms of interest rates or be a little tighter on the terms the next time you want to borrow money?
Sure. Lance, let me ask you this. Because you manage a portfolio.
Right.
What advice would you have for somebody who is fearful and says, I don't want to leave my money in this casino, or should they?
Well, the thing is that if you look back over the last really 10 years, stock markets have gone nowhere. Actually, stocks have been one of the worst performing asset classes out of everything. Bonds have performed much better. Cash has outperformed the stock market by 30% over the last decade. It's hard to believe when you're talking about stock markets going up and down.
Because you figure it just keeps going up eventually.
That's what we're told by Wall Street. And they're told to invest for the long term, everything's going to be fine. But in reality, money is very tied to what happens both economically as well as geopolitically as well as financially. And if you look at the markets, and you're right about what you said earlier, is that the markets really aren't paying much attention to the debt issue. In fact, the markets are disconnected from the economy as a whole. You've got the economy is going to come down over the course of this next year. Year-over-year declines in the economic growth rate. We're going to be at 1.5% or less the second quarter. Year-over-year profit margins are declining. Basically, if you look at almost all of your indicators, the Chicago Fed National Activity Index just came out this morning in contractionary levels. So you're seeing the economy weaken across the board, yet the markets, the bond market in general,
has been doing well.
They're doing well, but they're ignoring the reality of the fact that the economy's slowing. And look, you have another issue on top of Greece and Italy and everything else that's going on with a potential default on debt. It's going to really put a lot of pressure on portfolios probably very quickly. So we've been recommending since April more cash, overweight fixed income, underweight equities.
Okay. So, John, quick advice. If you had to give 30 seconds of advice to somebody, let's say they're approaching retirement and they have saved up a nest egg for their whole life. 30 seconds of advice. Should they just sail through this, or should they be doing something actively right now?
Well, the first thing I've been telling my potential retirees to do is don't retire. Until we get past this soft spot or this weak economy, if you retire, you can never get your job back again at the same level, at the same stature that you were before. Go ahead and work another couple extra years until we get this whole deal behind us. Once that's behind us, then you can worry about retiring. It may be another 3, 4, 5 years, but it'll be worth it in the long run, because if you have to go back to work and at Home Depot or someplace like that, it's not going to be a pleasant deal.
All the jobs at Walmart are pretty much taken.
They are.
Yeah. Nina, what do you think? I mean, people just have to work longer. I mean, should they? Is there a factor of this 24-hour news cycle that has put maybe more emphasis on this sort of crisis than it would have been maybe 50 years ago?
I think absolutely. I think that the debt limit has been politicized a little bit with economic policy issues. I think that our government will not default. The full faith and trust of the American economy really is a fulcrum for the entire global economy. But for the individual small business person, you've got to look at how you manage your debt and your revenues. You have to have a balanced approach if you're going to get investors or lenders to say you can handle the upcoming unforeseen circumstances in a responsible, orderly manner, as you agreed to in this financing transaction you're trying to achieve.
So investment guys, talk to your financial advisor about moving a little bit out of stocks and a little bit more into cash and bonds. You think that's good advice in the short term?
Yeah. Well, Jeremy Siegel said for the last 200 years you've made money in stocks, but what he doesn't recognize is the fact that you've gone from a frontier society to a emerging market society to a regular national competitive economy, and now to a superpower. But if you step down from being a superpower, that stock market doesn't necessarily do what it's done over the last 200 years.
Well, and I just did a study just a couple of weeks ago and showing the growth of the economy. What's happening in our economy today is not something that occurred just over the last couple of years. Right. This has been a function of our policies over the last 30 years. Year-over-year growth rates in the economy, economic growth, wages, disposable income, and personal savings have all been declining for the last 30 years.
So are we all going down the tubes or what? See, that you're scaring me.
No, but what it means is that stocks are a function of economic growth. It's not vice versa, okay? Stocks are a representation of how strong the economy is, and for the last 30 years, we've been using leverage to cover up weakness in the economy. This is why today we're at 354% total credit market debt to GDP. When the economy was healthy, we were at 120%. So we just have so much leverage that's consuming all the disposable income. Output and consumption is lower, and it's going to continue that way for the next decade.
Are we going to have to go through, I don't know if you guys have heard this word, austerity. They've been talking about this in Greece and in Portugal, and some, which basically means that your Social Security benefits, your Medicare benefits, all this stuff's going to have to be reduced drastically in order for the country to pay its bills. Do you see that in the future of America?
No, I actually see America coming around to realizing fractional banking does not work, and the system blows up every 10 years. What has to happen is, instead of the government paying the interest, they need to create the money and receive the interest. That's the only way you're going to get rid of $14 trillion worth of debt. You're not going to get rid of it by taxing, or you're not going to get rid of it by reducing spending. There's too much there.
Well, and again, if you try to do austerity in any economy historically over the last 800 years, if you try to implement austerity when you have a high unemployment rate, you crash the economy. It's just a function.
Absolutely.
There's just not enough people contributing to the process to do that.
So we're all going down the tubes. That's what I think. We're all going down the tubes, Jose. I don't know. Check, please.
It is a wonderful discussion, but we also want to get the panel's insight on our exclusive Rasmussen poll that was just released over the weekend. Now, in this poll, 45% of those surveyed said they trust Republicans more when it comes to handling economic issues. 35% put more trust in Democrats, and 19% were undecided. Could the debt ceiling crisis hurt President Obama's chances of re-election now? Question to the panel.
Well, one of the things I would say about that, Jose, is that they didn't ask the question of, do you trust any politicians? And I think they would have done
none of the above.
None of the above.
I'm going with the undecided column.
What do you guys think?
Look, the problem right now is that, and something Nina said earlier is really important here, is that this debt ceiling has been used to, has really been more of a political venture than something that's the reality of what's going on. And both sides are using it to gain political ground, use it as political capital. One thing I've been saying now for the last few weeks is that this is the wrong fight to fight, period. We need to be focusing on what John said earlier, creating real revenue, real economic growth. That's what's going to create enough revenue to start paying down the debt. Of course, we do have to do something about the spending. But, you know, both parties right now, in my opinion, this is just my opinion, I've fallen to the undecided column. I really don't agree with the way either party's handling it at the moment.
I'm with you, yeah.
I think the whole country is in the center. I think bipartisanship is really what the politicians are overlooking. And I think the greatest part of our country has been when we both sides pulled together and came up collaboratively with efforts. I don't know if this president is going to be able to successfully do that. I think that's what he's trying to do very hard. But until some other people kind of, as they say, man up and say, we're going to do what's right for America first and let the electorate decide afterwards if our courage will pay off for us.
And speaking of the Republican, we have another Rasmussen poll that we would like to get your responses on as well. Now, this one shows that voters are very concerned about the debt ceiling debate. In the poll, 62% of those surveyed said they worried that President Obama and Congress will raise taxes too much rather than too little. Only 26% fear they'll raise taxes too little, and 12% they're just not sure. Is it likely that families will eventually end up seeing a big tax increase?
Nina, are we taxed too much already, or are we around right?
I don't think we're taxed too much in certain aspects of the tax base. I think individuals and households have an enormous amount of pressure. I think that we can find a balance in our corporate tax base where they can give a little more without disincenting them to create jobs, and I think we just haven't found that balance yet.
John, what do you think?
Well, one of the things that Obama is telling you is he wants more revenues, and people think he's going after people with Lear jets. He's not. I mean, he's going after profits on MLPs that have favorable tax treatment. He's going after mortgage interest. He's going, I mean, you don't raise $2 or $3 trillion by, you know, taxing corporate jets.
Right.
No.
Okay, so he's going after all of those tax deductions. That's what people need to realize. Now, I don't think that's a bad thing. I would just as soon see us have, you know, flat taxes and everybody pay exactly what they owe. I mean, because right now you look at Carnival Cruise Lines pay 1.2% tax on all their revenues.
And I think GE had 0 or something.
Exactly.
GE has the largest tax department ever to keep from paying taxes.
Yeah.
Exactly.
And they're in charge of our small business growth. Figure that out.
Well, Jose, it kind of sounds like the consensus is that I think most of America, probably the four of us included, many of the folks at home are just basically fed up in general, and they want all the nonsense to stop up there in Washington and just get it done.
Yeah.
It's one of those situations that everyone in the country, and in this particular case, everyone in the world is watching what's happening in Washington. We appreciate the panel. They've provided us with a little bit of insight that we didn't have before. And now I want to toss it over to my colleague, Melissa.
That was great insight.